Good morning, everyone, and welcome to Butzel Long's webinar, The CARES Act Provider Relief Payments. Are there strings attached to no strings attached money? During this morning's presentation, please feel free to submit questions to the presenters using the GoToWebinar control panel. Our presenters will answer as many questions as they can at the end of the webinar, time permitting. Also, a copy of this presentation will be made available this afternoon on the webinar event page and on Butzel Long's Coronavirus Resource Center on butzel.com. So with that housekeeping out of the way, I'd like to introduce our panelists. Deb Giroux and Mark Lazat, both shareholders in Butzel Long's Healthcare Law Practice Group, and Paul Hawara, an associate in Butzel Long's Tax Practice Group. Deb?
Thank you, Jonathan, and thank you everyone for joining us this morning to talk about some of the provider relief funding opportunities to healthcare providers out there under the CARES Act. As many probably have heard, and we will touch upon this a little bit later, the CARES Act, there is a second round, CARES 2 if you want to call it that was passed in the Senate last night. Much like all of the other CARES Act legislation, regulations, and all of the COVID information, Butzel Long will be preparing webinars to discuss those and has already posted on its website, the COVID resource page, information regarding what the Senate passed late last night. We have received a number of questions from the group prior to the start, which many of them are concerned about the Paycheck Protection Program. Unfortunately, that PPP program is a webinar in and of itself in terms of all of the different iterations, so we won't be going into any detail on that. If we have time at the end, we certainly will try to address those questions, but I would direct all of the attendees to the information on our website, which includes all of the past presentations, webinars, and materials on everything that we've looked at from related to the COVID pandemic, the CARES Act, the Family First Act. So any questions that you have that we are not going to address today have likely been addressed and is available on our website. So just an overview of today's webinar. Like I said, we're only going to talk briefly about the CARES Act. We really want to focus on the healthcare provider related programs, particularly those that pertain to funding in this time where there has been a decrease in the ability to provide services to your patient population. But we're also going to talk about the administrative and the accounting requirements and hurdles that are built into these various programs. As you will come to find out, like a number of government programs, there are still a number of questions as to what is going to be required. This whole CARES Act, because of the nature of the COVID pandemic, has really been flying by the seat of its pants for the government. And so every day seems to be a new day in terms of what guidelines apply, what regulations apply, and quite frankly, what the legislation is. So we tend to say, you know, just like the Michigan weather, for those of you that are in Michigan, if you don't like it, if you don't understand it, wait a minute, it will definitely change. So for those of you that are not familiar with the CARES Act, I think everyone is, but the CARES Act is a over $2 trillion economic relief program due to the coronavirus, and it's the largest in America's history. The slide shows you kind of the breakdown of where the monies were allocated under the CARES Act, and this is the CARES Act Part 1. Part 2, as I indicated, and we note down here, there's a new congressional bill that adds another over $484 billion, billion to the bottom line, which is going to focus primarily on the PPP program, adding an additional infusion there, as well as additional infusions of cash in the amount of $100 million, or excuse me, $100 billion with a B, to the healthcare industry. 75 billion of which is really going to be to the people that are on this call, on this webinar, the actual healthcare providers, as opposed to those that are coming up with testing and viruses or vaccines and doing the diagnostic aspects. So that's one of those wait and sees. We should know by the end of the week what the final legislation will look like, and then we will be able to answer questions on that. As it pertains to healthcare providers, there are two different programs that we want to focus on, but I would be remiss to not discuss the other potential funding programs that are generally available to employers and self-employed, including healthcare providers, and that's the PPP that we've talked about, which is the forgivable loans. Unfortunately, the funds got exhausted rather quickly, and we are looking for additional funding to come at the end of this week. There's also the economic injury disaster loans, or the EIDL. These are loans. They're not forgivable, but they're low interest rate loans, and they offer some payroll taxes. Again, that is an item that we are not going to talk about in any great detail other than what I just said. There is sufficient information on our website if you have any questions regarding that. And then there's also payroll tax credits that are not available with the PPP. So what is this webinar going to focus on? We're going to focus on two of the payment programs that fall under the CARES Act. The first one is the Advanced and Accelerated Payment Program, or the AAPP, which Mark Lazat, I will turn over to in a minute to talk about in greater detail. But note that that is a loan payment program where repayment is required, and there are some fairly vigorous timing constraints on the repayment requirements. But again, like all other legislation and regulations, they're changing on a daily basis. And then the second program is going to be the Provider Relief Fund, which is a grant program, and I will talk about that after Mark gets through the accelerated, or the AAPP program. So with that, I will turn it over to Mark to discuss the AAPP.
Thanks, Deb. So as Deb mentioned, this is one of the two programs that we're looking at that have come up in the CARES Act. But the AAPP actually isn't a new program so much as it's an expansion of an existing program. Unlike the Provider Relief Fund that Deb will talk about shortly, that is a new program. The AAPP is focused on the Medicare system. Healthcare providers who serve Medicare patients participate in Medicare billings and already have a billing process set up and are already participating and reporting and getting paid by Medicare. Just to give you a little bit of a flavor for the scope of this, so we were talking in preparation for this, and some data just came out that said over the last 5 years, there have been something like 100 providers who have taken advantage of these accelerated payments. And in the pandemic, there have been something like 17,000 that have looked into this. So this is something that's available in other circumstances, but is now being rolled out to broadly to every Medicare provider based on what's going on with the pandemic. There are, of course, a couple of different parts to the Medicare system and different types of providers who can participate. Medicare Part A is hospitals, not only general inpatient acute care, but also certain types of specialty hospitals. Medicare Part B deals with physicians who treat Medicare patients, and also certain non-physician healthcare providers and suppliers of durable medical equipment. So the overall purpose of this AAPP program, AAPP, is to get funds to the providers as quickly as possible to help address short-term cash flow issues or when there are other circumstances that have delayed claim submission or delayed Medicare's processing and payment. So by example, as I mentioned, there have been some uses of this over the years. So what if there was a natural disaster that affected the ability of folks to bill and process payments or Medicare to respond? So again, the idea is that this isn't new money, it isn't free money, it's just an advance of what you were already entitled to, but getting it into your hands to address an urgent cash flow situation. So like anything else, it probably would help if we could understand a little bit of the who, what, when, where, how, why when we get through this. So let's talk first about who's eligible. Generally speaking, it's for providers who have billed Medicare in the last 180 days. The focus here is on active Medicare providers. Those are the ones most likely to participate regularly and to rely on Medicare for payments and for their cash flow. You can't be in bankruptcy. This isn't a bailout program. It's designed to help ongoing healthcare providers in their businesses who are having these cash flow crises. You can't be under review or investigation. Medicare doesn't want to be advancing funds to providers who are already suspect or who are under review, or where CMS already has concerns or issues with past practices that are being investigated, or where they think there are people that they're auditing and might have to repay money. And likewise, you can't have outstanding delinquent accounts owed to Medicare for past repayments. Again, they're not interested in bailing people out, and they're not interested in dealing with problem providers, those who are already under review for other reasons. They're looking at providers who are in good standing and without current regulatory compliance or billing issues, and trying to assist them to stay solvent, stay active, and keep serving Medicare beneficiaries. So how do you request it? If you are among the who is eligible, how do you do this? Well, unlike the provider relief fund, which Deb will talk about in a minute, this isn't automatic. There's an application process. The provider relief fund is moving very quickly, and Deb will go over that. But in this case, you're going to have to apply. You have to supply some key billing and contact information, and you also have to attest to a reason. Now, note that there's some specific language quoted in the materials here, that there's been a delay in the billing process, that it's of a temporary nature, it interferes with the billing cycle, it's outside of your control, it's not due to other payors or private patients, but just problems with these Medicare payments. So you have to go through this application process, provide some billing data, provide some attestation here. There's a payment calculation as established by CMS. There's considerably more detail in the application process here, and we'll talk a little bit later about the levels of payment. But this, if nothing else, this tells you you're going to have to get your billing and financial people in the game early if you haven't already talked to them, because there's some work that has to be done here in pulling together information. And it won't surprise you that you have to attest to some of the other things we mentioned before. You have to attest that you're not one of the people in a problem category, that you're not planning to cease operations, and you're not planning to file bankruptcy. Medicare certainly doesn't want to be in a position where they give you the money and then you take the money and run. This, again, is supposed to be for established providers intending to remain in business and intending to continue to serve Medicare patients and beneficiaries. So once you understand who you are and if you're eligible and how you go about doing it, what actually do you have to do and when does this happen? CMS is trying to accelerate the payment processing as much as possible to maybe more like a week as opposed to closer to a month that it's been in the past. At this point, we don't have too much information yet on what providers are seeing because it's happened so fast. People are jumping into it, and it depends on the different Medicare contractors. I don't really have a handle on how quickly they're doing it. But a lot of people are trying to take advantage of it, and CMS's commitment and what they're pushing through to their contractors is to try and process these as quickly as possible. But the way to start here is with the Medicare administrative contractor. So again, you know, Medicare gets billed through these organizations. There are links here. It will send the materials out to folks afterwards, so you'll be able to have clickable links on these as you figure out who your administrative contractor is, how you go through the process. And again, this will be familiar with people who've been in the Medicare billing process before, established Medicare providers. You're going back to the billing process the way you always do, routing your requests that way, but essentially requesting in advance and then seeing about how quickly they can process it, so you can deal with this situation and keep the cash flow going while all of the other craziness is happening around your business. Again, not free money, it's an advance. There are some repayment things. Paul will talk about that in a second. But that's the, you know, some processing that you have to go through to do that. And then what can you get and what can you use it for? If you are among the who is eligible and know how you go through the process and when and how you do it, what can you use it for? So in very general terms here, most Medicare providers can get 100% of what a trailing 3-month period would be. So you got to get your billing and financial people involved and go through that process to figure it out. Some providers can get more. Specialty hospitals that are indicated on there can get more of a 6-month period rather than a 3-month period. And then there's a special situation for critical access hospitals. I suspect that probably doesn't apply to folks on this call, but critical access hospitals can get an enhanced amount, 125% of what they were billing Medicare. Once you get it though, there's no particular restriction on the use of the funds. Now, unlike the Paycheck Protection Program that some of you are doing, that has very detailed rules on how you use payroll and rent and utilities and a bunch of restrictions and reporting and forgiveness calculations. And unlike some of the other programs for relief, there's no particular restriction on the use of funds. That's because this is just money you would have got anyway, you're just getting it earlier. If you're a regular Medicare provider, you're getting your regular Medicare payments, you're just getting an advance against what would be your future payments, and it'll be settled up later. So the good thing about this is you can apply for it, you can get it, it can help your cash flow, and there aren't any particular restrictions on the use of it. Now, having said that, although there aren't any restrictions on the use of it, you still have to pay attention to it because there are a lot of tracking, accounting, and reporting rules. So what I'd like to do now is to turn over to Paul, and he's going to talk a little bit about some of the repayment reconciliation terms and make sure that we get up to speed on what you have to do next after you get the money. So Paul?
Thanks, Mark, and hi, everyone. So regarding repayment, I'll break down the time period starting with the issuance of payment. As Mark mentioned, the processing time has been greatly reduced to about a week. This is a significant improvement of what it used to be. Once the funds are issued, the provider has what is called a 120-day delay period. During this period, the provider can continue to submit claims as usual. At the end of the 120-day delay period, the recoupment period begins, and every claim previously submitted by the provider will be offset from the new claims to repay the accelerated or advanced payment. This is being referred to as the reconciliation process, and I'll point out that this process is automatic, so nothing affirmatively needs to be done to trigger the reconciliation process. So instead of receiving payment for newly submitted claims, the provider's outstanding payment balance is reduced by the new claim payment amount. Note that while this is good in the short term, this potentially raises a cash flow challenge during the reconciliation process, and providers should start assessing and planning for that now. As shown on the slide, certain hospitals, including inpatient acute care hospitals, children's hospitals, and certain cancer hospitals, will have up to 1 year from the date of the accelerated payment to repay the balance. After 1 year from the payment, the Medicare Administrative Contractor, MAC, will begin a manual check to determine if there's a balance remaining, and if so, a request for repayment of the remaining balance will be sent to the provider. All other Part A and Part B suppliers will have up to 210 days from the date of the payment until the reconciliation process begins. Note that the requirement or the day period for the Part A and Part B providers is a bit less than the time allotted for most hospitals. And then lastly, for the periodic payment Part A providers, which is a small subset, the reconciliation process will occur at the final cost reports. So those are the repayment terms. And on the next slide, we will discuss best practices from a compliance perspective. So prefatory note here, and the slide should change in about a second. There we go, thanks. A prefatory note here is that you should start looking into the specifics of this program as early as possible. Different interest rates apply. The applicable rate appears to be 9.25%, but things are changing fast and this is subject to further change. The second note is that it's important from a timing and income recognition perspective to consult with your CPA and tax advisor to develop an efficient compliance strategy. The particular recognition rules may depend on certain accounting methodologies, but the point is to do the planning on the front end. Regarding the application, there are a few important compliance-related items to keep in mind. From a cost reporting perspective, providers should consider submitting separate applications if they have separate care units. For example, this would be a rehab unit and a psych unit. This also applies for providers with multiple NPIs or National Provider Identifiers. Doing so in submitting separate applications will make the reconciliation process a bit more streamlined. Second, submit the application with caution and do a double check prior to submission. The application is subject to the False Claims Act, and you want to be sure essentially that the application is accurate in all respects. And further to this point, the information published by the CMS already makes it very clear that the provider has no appeal rights related to the payments. So the key there is just to double check the application and make sure it's accurate and sufficient for the needs. With that said, another key takeaway is to come up with a clear plan assessing the need for the funds, the amount needed as previously mentioned, and to involve the financial folks, as Mark also mentioned, including your tax advisor early on in the process. We are constantly keeping up with the developments in this area, and they're coming out on an almost daily or weekly basis, and we welcome you to reach out to us for further guidance. Thank you, and I'll hand it over to Deb to begin our discussion on the next major program.
Thanks, Paul. So, like Mark said, the AAPP was an existing program that was expanded to allow more providers to take under its wings. The second program that is new is the Provider Relief Fund, and this is a fund that was born out of the Public Health and Social Services Emergency Fund, in which the CARES Act provided a $100 billion appropriation. And I quoted this language so that you know that even though they have said, and when I say they, the government, HHS, has stated that this is free money, it really isn't. There are conditions that apply to this money. And one of them is right here in the language of the CARES Act itself, which says that this $100 billion is to prevent, prepare for, and respond to COVID domestically and internationally. And you have to be an eligible healthcare provider for healthcare related expenses or lost revenues. So to say that it's free money isn't actually true. The problem is finding out what those strings that are attached to it are an ever-changing dynamic. And while there are few hoops to jump through to get the monies, actually there are no hoops to get the money, it's retaining the money that you have to jump through a couple of hoops. We put this presentation together so that we could highlight to providers the things that they need to consider before they press that acceptance in the portal, things that don't really rear themselves when you look at what has been said about this program. So what is the program? Well, we know that the first installation of the Provider Relief Fund is the $30 billion initial payment that most individuals received via a direct deposit on April 10th of this year. As of that date, 26 billion of the 30 billion that was earmarked for this particular program had been sent out to the eligible providers. And we'll talk about how the calculations are for that. But what it was done with this $30 billion is to give an immediate infusion of cash grants. And that's the nice thing, is that this, unlike the AAPP, this is a grant. And if you are eligible and if you do what the government asks you to do, you don't have a repayment obligation. That's the beauty of this. This is infusing cash to those providers that are losing money as a result of COVID, either because they're caring for individuals without with increased expenses such as PPE, or those that lost their revenue because they do not provide the type of services that COVID patients need, and so they have closed their doors for the time being. But again, so the question is, what is an eligible provider? And the second question, we've categorized these. What is an eligible expenditure? Because not everything applies. So turning first to the PRF eligibility, we know that in this first round, they based it on fee-for-service providers, your facilities and providers that had a Medicare fee-for-service reimbursement in 2019. The amount of your reimbursement was based on your 2019 billables to Medicare. And that does not include, because a lot of people have asked, how come my numbers based on the calculations that I've seen, which is roughly 6.2% of your fee-for-service revenues, why is my number, what they gave me, different than that? I show Medicare monies being XYZ, and mine is significantly less, or even just a little bit less. And the reason for that is, number one, the 6.2 is not an absolute number, it's an average. So they're basing it on whatever your percentage is that you build to the Medicare fee-for-service system in 2019. So we've given an example, if you were a provider that billed $100 million to the program, and the program in its entirety was a $2 billion program, you're going to take the percentage of that entire program that your practice took from as the percentage of what you can get, and you multiply that by the $30 billion that's available for this program. So you get your pro rata share of how you received monies, but it's only the fee-for-service program. So those of you that also did perhaps Medicare Advantage program, that was excluded from the amount that you could receive under the $30 billion first round of infusion. The other eligibility requirement is that you provide or provided services after January 31st for COVID diagnosis, testing, or care. And that is for individuals that were possibly inflicted with COVID or actual cases of COVID. And this is where there's a lot of discrepancy between what the government is saying and what the CARES Act says, because the potential for treating or, doing any care or diagnosis for COVID patients, HHS says that they presume every patient that you have falls into that bucket of at least possible or potential COVID patients. But we've seen some providers, I've spoken to providers who asked where their monies were, and they provided services that would not have necessarily constituted services that are diagnoses, testing, and care for COVID. A great example would be a podiatrist. A podiatrist may have a large Medicare fee-for-service reimbursement for 2019, so they fit that one. But the question is, did they actually diagnose, test, or provide care to individuals or possible care to individuals with COVID? So it doesn't appear that everyone would fall under the umbrella if you did not do a diagnosis, testing, or care for individuals. It's a broad spectrum. HHS says it's a broad spectrum, but I caution everyone to look at what they've actually done, because like Paul mentioned, and I'll get into it in a minute, we're talking about monies from the federal government, and we are talking about monies that are subject to the False Claims Act. And when you have, and we'll talk about the eligibility for the attestation, you'll see that this is subject to the False Claims Act. The other eligibility requirements, I'll go through them really quickly. You can't be terminated from participation in Medicare. That's kind of a given. If you're terminated from Medicare currently, you're not going to get more money in the future. Same holds true for the AAPD. You're also not excluded from participation in any healthcare program. So if you have been, if you're excluded from one, chances are you're excluded from all of them. But for example, if you were excluded from Medicaid but not Medicare, you still would not be eligible for this program for the grants. The final thing is that your Medicare billing privileges cannot be currently revoked. For those of you that know, you can have your billing privileges revoked by Medicare. That's a CMS Medicare penalty or availability to eradicate fraud in its program that is separate and distinct from the OIG exclusion authority. So you also have to have your Medicare billing privileges fully intact. So the utilization of the funds is far broader than the eligibility in the first place. This is where you get into the use of funds to prevent, prepare for, and respond to coronavirus, but it's also where your losses that have been incurred because of coronavirus fall into play. So you can use the grant funds if you are otherwise an eligible provider, you meet the criteria from the prior screen, to reimburse your practice for healthcare related expenses or lost revenues that are attributed to the coronavirus pandemic. I would submit that almost everyone would fit into that category. If you have lost revenues because you are no longer allowed to do elective surgeries or well care visits and things like that, things that are not emergent services because your state, Michigan, has said that you're not an essential provider, or you only provide services that are non-emergent, and so you've opted to close down, you can use these funds for those lost revenues. And we'll let Paul get into the accounting nightmare that is going to likely transpire from all of these different moving pieces of funds and accounting. But at the end of the day, most people, if it's related to COVID, which most of today's expenses are, would be covered by the grants that you get. The other caveat is that you can't use these for expenses or losses that have been reimbursed from other sources, nor can you use them for expenses that were incurred prior to the pandemic. So the final piece in this, and this is something that, as most of you know or should know, the portal for attestation and acceptance of the terms and conditions opened up on the morning of April 16th. And for those of you who have not looked at it, we have taken a look at it thanks to a provider giving us their TIN so we could go through and see what the steps are. Differences between this and the AAP, there is no application. As I said, CMS or HHS simply put the money in your account on the 10th. Those that do paper billing should expect them in the next couple of weeks if you haven't received them already. However you get your Medicare reimbursement is the manner in which you received your grant. When you go into the portal, they're going to ask for there's 4 steps that you have to go through. The first 3 are pretty easy. The first one is incredibly easy. It's, are you eligible? Did you bill for Medicare in 2019 or Medicare fee for service? Yes or no. You click yes, you go to the next page. The next one asks for your provider TIN, or if you're a solo, your social security number or whatever EIN you have on file with Medicare. And if you don't have one, then you're stopped there. You can't go any further. So have all of this information with you ahead of time so that you can easily go through the process. The third page, once you get through the provider TIN, is entering into, and this is kind of confirming that you are who you say you are. What your provider TIN is going to be the question, and you're going to confirm that, but you're also going to be asked for the last, I think it was 6 or 7 numbers of the bank account in which the monies were deposited, as well as the exact dollars and cents payment information that you received in that account. So that's step 3. You go through that. You want to make sure you have that so you can get to the next step. This is where it becomes interesting, the attestation and acceptance of the terms and conditions and other relevant statutes. And the reason why I put it in italics is to highlight the fact that in looking at the terms and conditions, make sure you look at that and you fully understand them before you accept the funds and attest to the criteria that you are eligible and that you're going to use them for eligible expenses and that you agree with the terms and conditions. Because in addition to the terms and conditions, which have a couple of different regulatory aspects to them, is consideration of the other statutes that apply to Medicare funding. Notably, the fraud, waste, and abuse laws are not ignored with this funding. Laws that pertain to federal grants. There are a number of different federal regulations that apply generally to grants, as well as grants that are healthcare related. And then this is the one thing that really got my radar up, was the infusion of the term materiality in the attestation. And the reason why that is so problematic is because when you're looking at the False Claims Act, one of the requirements that the government has to prove is that the payment was made based upon the certification, and the materiality aspect is that certification. And so for the government to be able to easily meet its burden under the False Claims Act, they have to show that the attestation, certification, and acceptance of the terms in this case was material to them making the payment that they made, i.e. the grant in this case. So they are essentially taking that piece of it out of the equation and simply going to the, is it false or isn't it false? Because the materiality, which is a highly litigated element of the False Claims Act cases, is now something that they have put out there and gotten your attestation to. So you have to be mindful that there are strings attached to this because they are telling you there are strings attached. The problem is we don't know what all of those strings are. The final thing I want to say from the attestation and acceptance is you have the ability to decline the monies if you don't want to accept the terms and conditions, if you don't need the money, although, you know, quite frankly, who doesn't? But it's really a matter of if you are not truly eligible, you don't think you're eligible, or if you do not want to or cannot abide by the terms and conditions that are in place, which would include the accounting and documentation requirements, you have to notify HHS within 30 days of receipt, so by May 10th, that you don't want the monies and return the monies. Otherwise, if you do nothing, it will be deemed an acceptance of the terms and conditions, and therefore the materiality aspects come into play. There we go. Sorry, there's a delay. So from an accounting perspective, I am going to turn it over to Paul so he can go through the various accounting and administrative requirements that we know of at this time. However, because the guidance keeps changing, we don't know what specifically they're going to be looking for. We can only guess. So Paul, you want to go ahead and talk about the accounting?
Yeah, that's right. And so I'll start with further to Deb's point. If you received relief funds, you should first make sure you've reviewed the T's and C's, terms and conditions, and attested via the online portal. And as Deb mentioned, there are filing requirements for all recipients. The filing frequency, however, is dependent on how much money was received in the aggregate under all COVID-19 relief packages. And this is not limited to the provider relief payments. It's also open to the other CARES Acts, as noted. The relevant threshold in terms of how much money was received is $150,000. And remember, this is in the aggregate. If more than $150,000 was received, then quarterly reports are due. Per the terms and conditions, the due date is 10 days from the end of each calendar year quarter. So this implies an initial due date in mid-July for quarterly filers. However, I'll note that at this time, the official due date has not been communicated. The key to keep in mind, though, is that there's a reporting obligation attached to these funds. And also the terms and conditions also provide, although with not a lot of detail, what the reports must contain. And that includes, one, the total amount of funds received from HHS under the acts. Two, the amount of funds received that were expended or obligated, which is a federal term, for each project or activity. Three, a detailed list of all projects or activities for which large covered funds were expended or obligated, including specific dates such as a description of the activity and the estimated number of jobs created or retained by the activity where applicable. And then four, detailed information on any level of subcontracts or subgrants awarded if that's applicable. There will likely be additional requirements that can add clarity to the current regs, but what we do know now is that there are reporting requirements, and providers must also follow federal rules that are currently in place regarding record retention, and I believe it's 3 years for the retention requirement, and also federal rules on the cost documentation. The next slide shows an image of the federal form that's likely going to be required. And here it is. This form is a standard form 425, and it has various fields. And I'll note that this has not been officially communicated, so this is definitely subject to be updated or tweaked, tailored per this specific act. But the key there is that there's a form, and documentation on day one is crucial, so that once the filing obligation arises, it'll be a manageable exercise. Further on the compliance, we'll next look at several best practices providers should consider. First, keep records on this program from start to finish. This includes documentation on the eligibility. The terms and conditions contain a clawback provision under which the HHS has the authority to recoup some or all of the payments made. Develop an organized system to monitor all CARES-related programs, including the PPP if that's applicable, and the related funds and expenditures to prevent double dipping. All of this is moving very fast, as I'm sure you're aware of, and money is on the line, so document every step. Second, from an accounting perspective, providers should strongly encourage recording the funds in a separate and distinct general ledger account. This also applies for the related expenditures. Third, understand the particularities and rules attached to the funds. As Deb mentioned, this is free money, but there are strings attached to the money. One particular rule that is made very clear is that providers cannot balance bill for services provided. So some providers will have to temporarily modify the billing practices. And additionally, there are other rules providers should be aware of. An example is that there's a limitation on the amount of funds that are allowed to be used to pay salary. And they refer to executive comp there, and there's a certain level, but that's another point to be aware of if that'll apply. And to conclude on the compliance, it's important to fully understand your obligations as a provider. The laws are changing fast, and we're learning the regs as they're coming out. But it's important to stay on top of the various rules and regulations, and that will be crucial to your overall compliance. With that, please let us know how we can help, and I will turn it over to Mark.
Thanks, Paul. So we've gone through these two new programs, and as you can say, we're just ripping through this as quickly as possible, and things are changing. There's still more to come, and we've actually already got a couple of questions on this. There will be a provider relief fund phase 2, if you can call it that. That's my term, not the government's term. But only $30 billion was pushed out in the program that Deb talked about so far. So what's supposed to happen with the other $70 billion? Well, the $30 billion was based on Medicare calculations because there's a centralized database and it's easy for CMS to do that, figure it out and push the money out. The other $70 billion is supposed to be given to rural providers, Medicaid providers, providers who deal with a high percentage of uninsured, and there's some other special tests and categories. But there's no comprehensive database for that. There's no centralized billing for Medicaid. That's a state-by-state program. And even in every state, there's multiple Medicaid managed care plans, like in Michigan. And there certainly is no common data source for billing people who are uninsured. Is that private pay that you bill? Is it amounts that you've written off, but you might be able to recoup under this program by providing services to people that couldn't pay you in the first place? And the answer is maybe, and we don't know. But there's going to have to be a lot of work to gather data. You may have to import some Medicaid billing data into an application process, presumably because there's no centralized system here. This is going to have to be subject to application. We just don't know what it's going to look like. But you're going to have to be talking with your billing people about, can they consolidate your Medicaid billing information? Can they find private pay billing information? And maybe even can they track written off private pay information, because all of those things, some or all of those things may come into the system. We just don't know. We also don't know what it means to target rural providers or hardest hit areas. I don't know if that means they get more money or they get the same amount that they actually billed, but they go first in line. And we don't know if the $70 billion is first come, first served, or it's based on a percentage formula like the Medicare system was for that original $30 billion. The answer is stay tuned. So where do we go when we kind of wrap up our thoughts here on recommendations? We'll hit on one or two things and then leave some time for questions. First of all, as Deb said, time is of the essence. Pay attention to that 30-day clock. For the PRF, especially pay attention to that attestation acceptance requirements. Make sure you understand it before you sign stuff. Look for guidance. We can help you with that, but it's got to be soon. You got a couple of weeks, not more, to figure this out and make your attestation and keep the money. Document everything, how it's used, what you said to the feds. You don't want to be in a position of being accused of filing a false claim because you didn't have your documentation in place. This is something where your accountant, your financial people, your billers have to be involved early. Start now and prepare for those reconciliation reporting processes. It's great to get the money now, but as Paul mentioned, that could create cash flow problems later. And of course, in the case of the AAPP and in the case of the PRF, there's some ongoing documentation and reporting. So get the professionals involved, start now, make sure you have a handle on your data. We've covered a ton. Deb, you want to just point people to our other resources going forward, and then we'll see if we got time for a few questions here.
Yeah, and one further recommendation that I want to throw out there is, because of the 30-day requirement, even though it's coming fast, it's also a good buffer for you to wait and see if there's any changes to the guidelines before you do that attestation. So you don't have to, do it right now, because we don't know what's going to be in the future in terms of the guidance. Don't wait too long, but wait a little bit and see if there's any change, because it has been an ever-changing environment. And like I said, when I started out this program, we've developed a number of reference resources for businesses and individuals on the Butzel Long website, www.butzel.com. There is a link on that to the coronavirus resource page, and on that you will find webinars and client alerts and other presentations that discuss all varying aspects that have been asked of us by our clients. So I would highly recommend individuals, if we don't get to your questions, to look on that page, particularly if they are more of the labor and employment or the PPP variety, because there is a number of resources that talk about all of the different acts, not just the CARES Act, but the Family First Act, and the laws that were expanded under those. So with that, I will turn it over to Jonathan to see if there are any questions.
Well, thank you very much, Deb, Mark, and Paul. As Deb mentioned, at this point, we have time to answer a few questions that have been submitted. If you do have a question, please feel free to submit your questions using the GoToWebinar question panel. So here's one right off the bat. I'm just going to throw it to all three of you. I'll let you jump in, decide who wants to answer this one. Have they given any further consideration to Medicare Advantage claims that were not included in the original HHS stimulus? Michigan has a far higher population of Medicare Advantage patients than the national norm.
So I guess I will jump in on that one, and Mark, you can chime in. But my understanding is that the second round of monies, the 70 billion that is still out there, is going to be provided to those healthcare providers that have a higher Medicaid population, who have a higher Medicare Advantage population, or who have a low Medicare population. Think about your children's hospitals that do a lot of federal Medicaid work, but did not get any monies under the various programs. So Medicare Advantage, those are certainly in the contention for the next round. They have been contemplated by HHS as well as by Congress. We just don't know how they're going to allocate those monies. We do know that that is a consideration for the next round of funding.
Yep.
All right, thank you, Deb. Here's another question that came in. Can the provider relief funds be used to pay for employed physicians if they make less than executive level 2, $192,000? And tagged on to that question is, can I prepay for medical equipment loans and rent?
I'll address the executive pay portion of it, and the initial answer is that yes. The terms and conditions contain a section that addresses this point exactly, and it basically puts a limitation on how much pay can be used, or how many funds can be used for this pay, and it gives reference to the executive level 2 job compensation amount. So The initial answer would be yes, but we'd want a little bit more detail on what the section 202 from the terms and conditions also state on any additional qualifiers to that.
Okay, thank you very much, Paul. Another question was looking for the Healthcare Provider Relief Fund. Do you have any guidance or examples of eligible and versus ineligible expenses, expenses not reimbursable through other programs and sources? Mark?
So
You mean in terms of what's in, yeah, I
yeah,
mean,
go ahead.
I was gonna say one aspect is what's eligible at all, but I'm not sure I quite understand the question, because one aspect might be making sure it's not payable from another source, so.
I think that's what the question is, Mark.
Yeah. Okay, Deb, yeah, why don't you, I just want to clarify.
Yeah, so eligible expenses is pretty broad under the PRF. I mean, it's got to relate to, it's got to have some relationship to the COVID pandemic. I mean, that's the 30,000 foot look. So, the easy examples are, the additional PPE that you had to put in place for your workforce if you continued in operation. The additional vaccines or medications that you use to treat individuals, if there's antibiotics or whatever the treatment protocols are, those are the hard resources and expenses that you can identify and say this was used for these individuals. I think again, the presumption that everything that you do from January on is for purposes of treating the COVID pandemic. You can make the argument that anything that you do falls under that, but you have to make it with good faith. So unfortunately, there isn't much guidance in terms of what that entails. We know for a fact that PPE is going to fall into that. We know for a fact that to the extent your income is not as much as your liabilities and your expenses, those expenses would apply. That would include necessarily the payment to your workforce. That would include the payment to other vendors to assist you to stay open so that you can continue fighting the pandemic. Like Mark said, what it wouldn't be is expenses that are recoverable, payment is recoverable from another source. That would also, include expenses for healthcare services that are, payable from another payor, if it's a commercial payor. So, there's a fine line. We don't have a lot of guidance on what they think, what the government is thinking in terms of what these expenses can be used for. So, it's really a look at it, and make the best argument. And when you're documenting why you believe that it falls under this, preparation, care for the COVID pandemic, so that when, or if it's more of a when you're asked for your documentation to support your expenditures, why you spent those monies and how it relates to COVID.
Yeah, I think you're getting a sense here, this is going to be a huge cost accounting problem. I mean, what are you tracking? Is it direct? Is it indirect? Is it loss of revenue versus already committed expenses? But just to give a quick example, you may be able to have both the PPP and the PRF. The PPP is restricted. If you've got a Paycheck Protection Program loan, you have to use it mostly for payroll, 75%. You can use a small percent for rent, utilities. But what if you used your PPP mostly for payroll and some of those permitted expenses, and then you used the PRF funds for things that weren't covered there, like documenting your lost revenue and paying for protective equipment? So you're going to have to, if you got both the PPP and the PRF, you're going to have to spend a little bit of time with a thoughtful cost allocation methodology. You don't have to be perfect, but you better be reasonable, and you better have it very well documented.
All right, thank you very much. And looking at the clock, looks like we are just about out of time. So I wanted to thank our panelists, Deb Jerome, Mark Lazat, and Paul Hawara, and I also want to thank everyone else who attended this morning's webinar, and apologize we weren't able to answer everyone's questions. But please feel free to reach out to the attorneys listed here on your screen, part of our AAPP and PRF assistance group here. And also reach or visit the Butzel Long Coronavirus Resource Center for more information. And one last note, a copy of this presentation and a recording will be made available later this afternoon on the butzel.com webinar event page and in the resource center. So thank you again, panelists, and thank you everyone who attended, and have a great rest of your day.